Hi guys, good evening. Am I audible? Okay, fine, fine, fine. So how is your preparations going on? You guys can tell in the chat box. How are your preparations going on? Just before that, I'll introduce myself. Myself, Lehan. I'll be taking this booster session for you guys. Okay. So can you guys tell me which standard do you find difficulty in? I hope everyone is attending the June exam session for the June exam session, right? Can you guys tell me who all are attending FR for this June? Okay, okay. So the majority of you guys are attending in this June session, right? Okay, okay, okay. Fine, fine, fine. So can you guys tell me which standard do you find difficulty in? Which standard do you guys find difficult? Or is everything okay? Do you want me to take any particular topic? Tell me. Come on, guys. So you guys are okay with every standard? I hope so. Your revenue. Okay. Anything else? What about IFRS 9? Financial instruments? Are you guys okay with it? Is it fine for you guys? Okay, okay, okay. Okay, okay, fine, fine, fine. So I'm planning to take non-current assets for the time being. Okay. I hope you guys are familiar with non-current assets. I'll just share my screen. Can you guys see my screen? Is it visible? Okay. So before moving on to the standard part, I hope you guys know how the exam structure is. See, we have three sections. That is for financial reporting. For financial reporting, we have three sections. Okay. For FR, we have three sections. We have three sections. See, in section A, you'll be having how many questions? 15 questions. Okay. You'll be having 15 questions of 2 marks each. Of 2 marks each. See, in this 15 questions, 5 will be very easy, 5 will be moderate, and the rest 5 will be in a difficulty level of moderate to difficult. Okay. So if you are not able to attend an answer, or if you are not able to do a question, please don't panic. Okay. See, getting 8 out of 8 questions right out of this 15 question is enough for you guys to pass. Okay. So don't panic if you are not able to answer one or two questions. It's completely fine. Okay. It's completely fine. If you're not able to attend two or three questions, it's completely fine. Don't panic yourself. See, if you're not able to attend a question, don't spend more time on it. Okay, just leave it and move on to the next question. Okay, if you are not able to do a question, don't waste much time on it. Rather, go to the next question and finish as much as questions it's is possible. Okay, so we have 15 questions. So you have to finish this section A within 50 minutes. See, time management is very important. That is the major thing that students lack. So you have to manage your time properly. See, time management is very much important. Okay. So you will be getting 50 minutes for this section A. Allocate 50 minutes for section A. That is around 3.3 minutes for a single question. See, only the problem questions will require more than 3 minutes and all. For the theory part, you can do it in within 1 minute, I guess. Even within seconds, you can do. So this is the average time that you guys have to spend for a single question. Okay. This is the maximum time that you can spend on a single question. So once you are not able to do a question, please leave it. Please don't waste your time. Okay. Now moving on to section B, we have moving on to section B, we have three case based questions. Okay. We have three case based questions. We have three case based questions. In this, each case will consist of 5 sub questions. Okay. I hope you guys are aware of this. There will be 5 sub questions, and this will also be for 30 marks. See, again, I'm telling you, comparing to section A, this will be slightly more difficult. See, difficult in the sense it won't be difficult. Okay. Comparatively to section A, section B will be more advanced. Okay. Now coming on to section C. Coming on to section C, you will be having constructive answer based questions. That is, there will be 2 questions of 20 marks each. This will be the most toughest part of FR. 20 marks each. You will be having 2 questions for 20 marks each. So that is like 40 marks. Okay. So here you can expect consolidation. You can expect consolidated statement, consolidation. You can expect interpretation. You can expect interpretation. Interpretation of financial ratios. Interpretation of financial ratios. And you can also expect what? Standard based questions. Okay. Standards. So what I want to tell you guys is that please don't panic during your exam if you are not able to do 2 or 3 questions. See, it's completely fine. See, the question paper is for 100 marks. Okay. The question paper is for 100 marks, and you only need 50 marks to pass. So just skipping 2 or 3 questions in each section won't affect your passing marks. So please don't panic if you are not able to do 2 or 3 questions. See, it's very easy to pass FR. It's very easy if you plan it accordingly. Okay, please don't panic. Please do proper time management so that you will be able to manage your time properly. Did you guys get it? Shall we start with the standards then? Shall we start with the standards? Okay. See, if you have any doubts, you can ask me, okay, regarding the standards. So I hope you know what is non-current assets. Okay. I'll start with non-current assets. That is NCA. See, there are few standards coming under NCA. That is IAS 16. What is IAS 16? We have IAS 40. Yeah, IAS 16 is PP. What about IAS 40? What about IAS 40? We have IFRS 5. We have IFRS 5. We have IAS 36. Is exactly. It's investment. Okay. Fine, fine, fine. And we have finally we have IAS 38. See, these all are the standards that comes under what? NCA. Among this, which one do you find more difficult? Which standard do you want me to explain briefly? Are all the standards fine? Are all these standards fine? We have borrowing cost. We have asset held for sale, NCA held for sale, NCA held for sale. We have IAS 36, that is impairment. Impairment. IAS 38 is intangible asset. So guys, tell me what is so what do you guys know about a non-current asset? What is a non-current asset? What is a non-current asset? What is a non-current asset? See, I'll just mention some characteristics of non-current assets. See, why is it called non-current asset? Yeah. See, is it only tangible asset? Is it only tangible assets? See, non-current assets are those assets which is purchased by the entity, which is used for more than 1 year and has some sort of economic benefit inflow from it. Got it? It can be either tangible or intangible. What you told is tangible asset belongs to IAS 16. Okay, we have tangible assets in IAS 16. Under non-current assets, all tangible and intangible assets are included. So I'll just give you a summary on non-current assets. See, this is purchased by the entity. Okay, non-current assets are purchased by the business or whatever, by the entity or by the company. For how long is it used? It will be used for more than 1 year, right? It will be used for more than 1 year. More than 1 year. There will be what? There will be economic benefit inflow from the asset, right? We will be having some sort of benefit from the asset that we have purchased. Economic benefit inflow. Benefit inflow. And what next? It will be controlled by the entity. It will be controlled by the entity. By the entity. And it can either be tangible or intangible. Tangible or intangible. Can you guys give me an example of an intangible asset? Intangible asset. What is an intangible asset? Any examples? Yeah, exactly. See, intangible asset consists of goodwill, patents, trademarks, etc. Yeah, exactly. Patents, brand names, we have trademarks, etc. Okay, I hope this is clear. Now let's move on to what? IAS 16. See, what all are the things that needs to be considered in IAS 16 is, see, you know the definition. What is IAS 16 PP? What is the difference between IA 16 PPE and non-current asset. What is the difference? What is the major difference? See, under PPE, we will only be showing what? Tangible non-current assets. Is it clear? We'll only be showing what? This is the most important thing. We'll only be showing what? We'll only be showing tangible non-current assets under PPE. Tangible non-current assets. Tangible non-current assets. Is this clear? What else? What else will be shown under IA-16 PPE? See, we cannot show every tangible non-current assets under PPE. There's one more thing that we have to consider. What is it? What is it? We cannot consider every tangible non-current assets under PPE. We cannot consider every tangible non-current assets in PPE. Why? Because under PPE, we will be showing only the assets that has been purchased for business purpose. Assets, yeah. See, that's also a part of non-current assets, right? Every asset gives us economic benefit. Okay. See, under PPE, we can only show what? We can only recognize those assets which is used for the business purpose, which intention is to use it for business purpose. Only the assets used purely for business. Used purely for business. So, okay. So let me explain you with this an example. Okay. So let's say there is an A company. Okay. There is an A company. There is an A company. See, the A company's main core of business is it's a chocolate company. Okay. What is A company? It's a chocolate company. So A company purchased purchased what? A building. Purchased a building for, let's say, the cost was 100 million. See, the business was purchased. Sorry, the building was purchased. The building was purchased in order to rent it out. So now tell me, can this be treated as a PPE? Can this purchase of building can be treated as a PPE? Tell me. Can this building be shown under IAS 16? Come on, guys. No. Anyone else? Can it be shown? Can it be shown? I need more response. We have almost 12 participants. I need more answers from you guys. No. So 3 of them are telling no, 2 of them are telling yes. Can this be treated under IAS 16? Okay. See, actually, you cannot treat this under IAS 16 PPE. You know why? What is our core business activity? What is A company's core? What is A company's core business? What is it? What is A company? What is A company doing? It's a chocolate company, right? What is A company? It's a chocolate company. Why did they purchase this building? Did they purchase this with regards to their business? Is it used for the production of chocolates, or is it used for anything related to business? Is it related to business? Is this purchase related to business? No. Got it. Are you guys clear? Is it related to is this purchase related to the production of chocolates or storing of chocolates or whatever? No, right? So this cannot be treated under what? This cannot be treated under IAS 16 PPE. Did you guys get it? Is it clear? This will be shown under what? This will be shown under IAS 40 investment property. Got it? Why? Because it is not used for the business purpose. It is used to, it is used as an investment, right? It is used for the purpose of investment. Got it? Are you guys clear with the concept? Do you guys get it? What all things will be shown under IAS 16? See, only the assets relating to the core business activity will be shown under PPE. Is this clear? Okay, fine. See, what if this building was purchased in order to store the chocolates that we have produced? What if this building was purchased in order to store the chocolates that we had produced? Can it be then treated as under IA 16 PP? Yes, exactly. See why? Because it is used for business purpose. Is this concept clear? Is this concept clear? Can we move on? Okay, fine, fine, fine. In order to recognize IA 16, there are two conditions to be met. Okay, recognition criteria. Let's come to recognition criteria. Recognition criteria. So in order to recognize the asset under IA 16, there are two conditions to be met. Okay. Any idea what all are they? Any idea? There are two recognition criteria. What are they? There are two recognition criteria. Two. What are they? Yeah, exactly. That is, cost can be measured reliably, right? Cost can be measured reliably. And then what? Exactly. Future economic benefit. There should be a, see, yeah, exactly, exactly. Future economic benefit and cost can be measured reliably. Exactly. Cost can be measured reliably and what? Future benefit, future economic benefit inflow can be derived from the asset. These are the two. This is very important. Okay, the recognition criteria is very important. If and only if we are able to measure the cost reliably and we can derive a future economic benefit from the asset, we can recognize an asset under IAS 16. So the next question is, what all costs can be capitalized under IAS 16? What all cost? What all costs can be recognized under IAS 16? Direct cost. Okay. What? Anything else? See, I'll tell you. You can tell me in the chat box what all costs will be recognized. What all costs will be recognized? Costs to be considered. What all are they? Yeah, purchase price, site preparation, delivery cost, borrowing cost. Okay, fine, 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 fine. Installation cost. Okay. See, I'll tell you, there are actually four costs. Yeah, directly attributable costs. See, the first one we have is all costs, all costs in bringing the asset to its, in bringing the asset to its working condition. Bringing the asset to its working condition. Asset to its working condition. See, what all costs will be included under this? Working condition. What all costs will be included in order to bring the asset under working condition? Come on, tell me. Yeah, we can. Okay. Transportation cost, right? What else? What else? What else? See, what about installation? Installation, etc. Did you guys get it? See, all the costs in bringing the asset to its working condition should be capitalized. And what next? There are one-time costs. Okay, one-time costs such as legal fees. Okay, one-time costs such as legal fees arising as a result of what? Purchasing the asset can also be capitalized. Okay. So, what next? What next? What about dismantling cost? Do you guys know what is dismantling cost? So, it is a very important topic. Okay. What is dismantling cost? Will it be incurred now, today? What is dismantling cost? Will it be incurred today? My question is, will dismantling cost be incurred today? When will it be incurred? It will be incurred when we are disposing the asset, right? It will be incurred after the useful life of the asset. Did you guys get it? It will not be incurred today. It will be incurred at the time of disposal, that is in the future. So how do we capitalize dismantling cost? How do we capitalize dismantling cost? So let's say the dismantling cost is 10 million after 5 years. So how will we capitalize this? How will we capitalize this dismantling cost? How will we capitalize this dismantling cost? We have to convert it into present value. Exactly. We have to convert it into present value, and then the present value will be what? Will be capitalized. Got it? The present value will be capitalized with the cost of the asset. Do you guys get it? Is this clear? Okay. Okay, fine, 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 fine. So, do you guys know we have two models in which an asset can be recognized in the books? Two models, using two models. What are they? What are they? We have two models in which IAS 16 can be recognized in the books. It's up to the company in order to use what all. It is one is cost model, one is cost model, and the other one is revaluation model. One is revaluation model. Okay, fine. So what is revaluation model or what is cost model? Do you guys have any idea? In cost model, any idea? Any idea? Okay, I'll just explain this. I'll explain this fastly with an example. Let's say there is a company. Okay, a company purchased what? Purchased machine. Okay, where do we record machine? Under which standard? Where do we record machine? Under which standard do we recognize machine? Under which standard do we recognize a machine? Exactly. We record it under IA 16 PPE. Let's say this machine cost $1,000. Okay. Or let's say the machine cost equal to $1,000. Okay. Useful life. Useful life is 10 years. 10 years. Is this question clear, guys? So here we have a company. A company purchased what? A company purchased a machine which cost $150,000. Okay. So now tell me, under cost model, how do we record this? What is the opening value of the machine? What is the initial value that we'll recognize for the machine? Initial value, that is opening value. What is the opening value of the machine under cost model? What is the opening value? What is the opening value of the machine? Initial value of the machine. I'm talking about the initial value, not the closing value. I'm talking about initial value. See the initial value. Let's say this is happening in 1st Jan 2020. Let's say this is happening in 1st Jan 2020. So what will be the value on 1st Jan 2020? It will be how much? It will be 150,000, right? It will be 150,000. So under cost model for an asset, what we have to charge? We have to charge what? We have to charge an expense, right? What is that expense called? What is that expense called? It is called depreciation. Got it. We have to charge depreciation. What will be the depreciation in this case? How much will be the depreciation? How much will be the depreciation? How much will be the depreciation? It will be 15,000. Will it increase or decrease the value of the asset? Will it increase or decrease the value of the asset? It will decrease the value of the asset, right? Yeah, exactly. It will decrease the value of the asset. So what will be the closing value? Closing value of the asset. Closing value of the machine. What will it be? It will be 135,000. Is this clear? Is this clear? So you guys, I hope you guys might have practiced some questions regarding this. And you can see they'll be asking us what all things will be charged in SOPL, what all will be charged in SOFP, what will be the closing value of the asset. Have you guys seen the questions asking the questions like that? Asking how it will be shown in the books. Have you guys seen it? See, they'll be giving the opening value, the useful life and all, and they'll be asking what all expenses will be charged in SOPL and all, right? So in order to make you understand the concept, just tell me. See, this is the year 2020, right? So let's prepare the 2020 FS. Okay. Let's prepare the 2020 FS. So let's just tell me what will be charged in SOPL from this transaction. What will be charged in SOPL? What will be shown in SOPL? What will be shown in SOPL? Yeah. We will show what? We'll show depreciation, right? We'll show depreciation. How much is the depreciation? It is 15,000. Got it. Is this clear? We'll show 15,000 under SOPL. What about SOFP? What about SOFP? What will be the value that we'll be showing in SOFP? What will we be showing in SOFP? Yeah, we'll be showing 135,000. What is it? It is asset, no? Asset or machine, right? So it is asset or machine. How much is it? 135,000. Is this concept clear, guys? Is cost model clear? Is cost model clear? Okay, fine. So now coming on to what? Revaluation model. Coming on to revaluation model. Coming on to revaluation model. So everything will be same under revaluation model, right? Almost everything will be same. Okay. See, until this, it is same, right? For both the cases, it is same until computing the closing value. So what will be the difference here? So let's say the fair value. Let's say the fair value of the machine, fair value of machine at 31st December is at 31st December is 142,000. Is 142,000. The fair value of machine at 31st December is 142,000. So what does this mean? What does this mean? Exactly. There is a gain, right? There is a revaluation gain. What is it? It is a revaluation gain. How much is the revaluation gain here? What is the revaluation gain here? It is 7,000. Is this clear? How do we find the revaluation gain? It is the difference of 142,000 and the fair value and the carrying amount. That is 142,000 minus 135,000, which is 7,000. So now tell me, how will we show this in the FS? What all things will be shown in the FS? What all things will be shown in the FS? Tell me. In SOPL, what all things will be shown? What all things will be shown in SOPL? What all things will be shown in SOPL? Yes, am I audible? Hello? Okay, okay, fine, fine. Tell me what all things will be shown in SOPL. We'll be showing depreciation, right? We'll be showing depreciation as we have shown in the previous case. 15,000 will be the depreciation. What about this gain? Where will this gain go to? Where will this gain go to? The gain will go to OCI, right? This will go to OCI. What we will show? We'll show this as revaluation gain. How much? 7,000. What about SOFP? What about SOFP? What all things will be shown in SOFP? What all things will be shown in SOFP? We will be showing we will be showing what? What all things will be shown in SOFP? Yeah. Under PP, what will show? That is machine, right? What will be the value of the machine? It will be 142,000. It is not the carrying amount, it is the fair value. That is 142,000. And what else? Anything else? Anything else? Anything else in SOFP? Anything else in SOFP? See, actually, there's one more thing in SOFP. What is it? See, whatever things we are showing in OCI will reflect under which section? Yeah, it will be reflecting in equity reserve, right? It will be shown in equity. It will be shown in equity as revaluation surplus. How much is it? It will be the same value as we have shown in OCI. That is how much? 7,000. It won't be shown as retained earnings. Okay, this will be shown as revaluation surplus. Why? Because we'll only transfer this to retained earnings once the asset is disposed. Is that clear? See, for the time being, we'll be showing it as revaluation surplus as the machine is still in hold. We have not sold see, this gain is not realized. First of all, see, is this gain realized? Are we earning something? Are we earning something? No, we are not earning something. See, for the purpose of the books only, we are showing this. See, this gain will only be realized when will this be realized? It will only be realized when the asset is disposed. Is that clear? Only at that time, what happens? This revaluation surplus will be transferred to retained earnings. Is that clear? Is that clear? Okay, fine, fine, fine. So we'll be showing 7,000 under 2020 FS. So guys, is this clear? Is this revaluation model and cost model clear? So you got a basic understanding of IA 16, right? I hope you guys are okay with IA 16. Shall I move on to the dismantling cost part? Okay, so you guys are good with recognition part, right? So let's move on to the IA 16 dismantling cost part. Okay. So here, this is what? This is IA 16 dismantling. Okay. IA 16, IA 16 dismantling. Dismantling. So let's say that's a company on 1st Jan purchased purchased what? A mining quarry. Okay, mining quarry. Mining quarry whose cost was 100 million. Cost is equal to 100 million. Useful life. Useful life is equal to 5 years. Useful life is equal to 5 years. So their legal requirement. There is a legal requirement to do what? legal requirement to dismantle. Dismantle what? Dismantle after useful life. After useful life. Okay. What is the estimated cost? Let's say the estimated cost for dismantling is 10 million. Cost is 10 million. And the discounting factor is 10 percentage. Now I want you guys to tell me what is happening here. Do we have any obligation here? Do we have any obligation here? Do we have any obligation? We do have an obligation to dismantle the asset after its useful life, right? So, what will be the cost of the asset in this case? What will be the cost that we have to recognize? I told you. Should we capitalize dismantling cost? 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 See, as I have mentioned here, see, you can see what all costs are to be considered. Dismantling cost should be considered while recognizing PPE. Is that clear? So how will we let's say the discounting factor. Discounting factor is equal to 0.826 for no wait. Let's say the discounting factor is okay. Do you guys know how to calculate discounting factor? Will most probably be given in the question. Okay. It will be most probably given in the question. Okay, fine. So now tell me what is the initial cost? How will we record? How will we show this in the books? How will we show this in the books? First of all, we need what? We need what? The present value of this 10 million today, right? We need the present value of this 10 million, right? So let's say the present value of 10 million is, let's say, 6.2 million. Okay. It's approximately equal to 6.2 million. So now tell me how much will be recognized under IA 16 PP for this mining query? How much will we show in the books? Tell me. How much will be the amount that we will be showing in the books regarding this purchase? I want the amount. How much will be the amount that will be capitalized? How much will it be? How much will be the initial amount? Initial cost of this query, that we have purchased. What will it be? Do you have any idea? What will it be? What will be the initial cost? What will be the cost that we will be recognizing? No idea. Yeah, we'll be recognizing 100 million plus 6.2 million. So on first, what will be the expense that we'll be recognizing? First Jan 2020, initial value. Initial value of the mining quarry will be how much? Will be 100 million. That is the purchase price plus what? Plus the dismantling cost, that will be equal to how much? 106.2 million. Is this clear, guys? This will be what? This will be the this will be the initial value of the asset. That is the mining quarry. Is it okay? Now, after initial recognition, what will we do? What will we do? As we move on throughout the year, what will we do? What will we do? As we move on, what happens to this asset? What happens to the asset? Yeah, there will be a depreciation, right? So what will be the depreciation in this case? Tell me. What will be the depreciation? What will be the depreciation? How much will be the depreciation? What will be the depreciation? It will be 106.2 million divided by 5, right? That will be equal to how much? 21.24 million. Is this clear? So what will be the carrying amount? Carrying amount at date of date of reporting. What will be the carrying amount? It will be 106.24 minus 21.24, which will be approximately equal to 85 million. Is this clear? Okay, now tell me, will there be any other cost that will be incurring on part of this other than depreciation? Have you guys heard of finance cost that is arising on this dismantling? Do you guys know? Do you guys know, have any idea of the finance cost that will be arising? Yeah. How much will be the finance cost that will be arising on this? Finance cost. What will be the finance cost? I need you guys to tell me what will be the finance cost. What will be the finance cost that we will be incurring as part of this dismantling? See, I'll explain. See, here what we did. We have, yeah, exactly. It will be 0.62 million. See, what we did here is we have converted what? We have converted the 10 million into present value. So as we move on, see, for assets, we charge depreciation. But for present value, see, for whatever value we have converted to present value, we have to unwind the discounting factor, right? What is the discounting factor here? What is the discounting factor here? What is the discounting factor here? This 10 percentage, right? So what we have to do as we move on in the future, we have to charge a 10 percentage interest on the present value that we have recognized. What is the present value that we have recognized? It is 6.2 million, right? What is the present value? It is 6.2 million. So we have to charge what? Finance cost on what? On this 6.2 million into 10 percentage. How much will it be? It will be equal to 0.62 million. Is this clear for everyone? I want everyone's response. Is this clear? We'll be incurring a finance cost as well as part of dismantling. Is this clear? Okay. Now tell me what all things will be show in the books. What all things will be show in the books. Okay, I'll show the so let's say this is 2020 FS. Okay. So let's say this is 2020 FS. What all things we have? We have SOPL. What all things will be shown in SOPL? Come on, guys, tell me. What all things will be shown in S? Okay. Depreciation and finance cost. Depreciation and finance cost. Okay, good, good, good. What about SOFP? What will be shown in SOFP? What will be shown in SOFP? What will be shown in SOFP? Here the depreciation is 21.24. What about finance cost? It is, how much is the finance cost? It is 0.62 million. Yeah, we'll be showing what? We'll be showing the asset, right? We'll be showing it. How much is the assets value? It is 85 million. Is this clear, guys? Now tell me, is there anything else? Is there anything else? My question is there anything else that we have to recognize in SOFP? Is there anything else? What did you mean by DC? Did you mean deferred consideration? Okay, okay, fine. Yeah, we have to show the deferred consideration. What is the deferred consideration for us? Is it a liability? Isn't it a liability? Isn't it a liability? How is it a liability? Because we will be incurring this cost, right? We will be incurring this cost in the future, right? It's for sure. There is a legal requirement. There is a present obligation to dismantle this asset. Got it? There is a present obligation to dismantle this asset. So, have we paid this already? Have we paid this cost already? No, right? We have not. We have not paid this asset. I mean paid this expense. So what is it for us? It will be a future expense, right? It's a future liability, right? So we will be showing what liability. What will be the liability? My question is, what will be the liability that will be shown in SOFP? How much will be the liability? How much will be the liability? How much will be the liability? Come on, guys. Take a guess. How much will be the liability? Okay. See, first of all, 0.62 million is the finance cost. It's not what? It's not the liability. Okay. It's the finance cost that we have incurred in SOPL. Coming on to the liability part. How do we calculate liability? See, what was the opening liability? What was the present value? 6.2 million, right? As we moved on, what happened? We incurred an additional finance cost on this, right? We incurred an additional finance cost on what? We incurred an additional finance cost on what? We incurred an additional finance cost on this 6.2 million, right? So what will be our total liability? 6.2 million plus 6.2 million into 10 percentage. Exactly. So how much will it be? It will be almost equal to 6.82 million. And this will be the figure what will be shown as liability. Got it? Is this clear? Is this concept clear? This will be shown as what? This will be shown as the liability. Because why is it shown as a liability? Because we are going to pay it in the future. There is a legal requirement to pay this out in the future. Are you guys clear with this? Are you guys clear? Is it clear? Everyone, I need everyone's response. If you have any doubts, ask me. Any minute doubts, ask me. If you have any minute doubt, ask me. Is it clear for everyone? Is it clear for everyone? Is it clear? Okay, shall we move on to the next topic under IA 16? See, this one is a very important topic. Okay, this is nothing but what? This is IA 16's disposal of an asset. Disposal of non-current asset. See, if you have done the quick questions, you might have seen many questions arising as a result of what? As a result of disposal. See, they might be asking what is the gain on disposal. Have you guys seen it? If you have practiced the kit questions, you might have seen questions relating to this. Right. There are many questions in the kit where disposal is tested. Okay. So shall we start this? Shall we start? Disposal of NCA. Disposal of NCA. So again, there are two types of what? Two types of models in which we'll consider disposal. That is one for revaluation model and the other one is for revaluation cost model and revaluation model. Is it clear? So let's see for what happens in cost model. Okay. What happens in cost model? So I'll explain this with an example. So there is a company. So there is a company. A company purchased the machine. Okay. A company purchased the machine and the machine's cost is, let's say, 50,000. Okay. Machine's cost is 50,000. Useful life. Useful life is 10 years. When did the A company purchase this asset? They purchased it on 1st Jan 2020. Okay. So on 31st December, the asset was sold. The asset or the machine was sold. The machine was sold for 43,000 on 31st December 2021. Okay. For 43,000. So how will this be treated under FS? Show the FS treatment. So, as I told you guys, how will we calculate the gain on disposal? Do you guys know? Do you guys know? See, are you guys good with the question? Do you guys understand the question? A company purchased a machine for 50,000 whose useful life was 10 years. When did this transaction happen? It happened in 1st Jan 2020. And when are we disposing this asset? We are disposing it on 31st December 2021. And for what value did we dispose this? We disposed it for 43,000. Is this clear? So, how do we calculate the gain or loss on this disposal? How do we calculate the gain or loss? In order to calculate the gain or loss, what we need? What do we need in order to calculate gain or loss? What do we need? What do we need in order to calculate gain or loss? How do we determine whether it's a gain or loss? Any idea? How do we know? See, we have to find what? Exactly. We have to find what? We have to find the carrying amount of the asset. What is the carrying amount of the asset on the date of disposal? We have to find what? The first step is what? Find the carrying amount. Why find the carrying amount of what? Carrying amount of the asset on date of disposal. When is the date of disposal? Tell me. When is the date of disposal? Tell me, guys. When are we selling this asset? When are we selling this asset? We are selling this asset on 31st December 2021. So how do we compute the carrying amount? How do we calculate the carrying amount? How do we calculate the carrying amount? Come on. How do we calculate the carrying amount? What is the opening value of the asset? What is the opening value of the asset? The opening value of the asset on at 1st Jan 2020 is how much? 50,000. Is it clear? It's 50,000, right? So what do we do now? What is the next thing that we have to do? What is the next thing that we have to do? We have to depreciate the asset, right? We have to depreciate the asset. For how much years should we depreciate? We want, see, what do we want? We want the carrying amount after 2 years, right? See, the purchase is happening on 1st Jan 2020. And when are we disposing the asset? We are disposing it after 2 years. So how much depreciation should be charged? Should be charged. How much depreciation should be charged on this asset? For how much years? 2 years, right? See, we have to charge depreciation for 2 years in order to get what? In order to get the carrying amount of the asset at date of disposal. So what is the depreciation here? It will be 50,000. It will be 50,000 divided by 10 into 2, right? Is this clear? Is this clear, guys? Is this clear? It's clear, right? Everyone. Everyone. I want everyone's response. Is this clear? Okay, fine. So what will be the depreciation? It will be 10,000. Got it. So now tell me what will be the carrying amount at date of disposal. Tell me what is the carrying amount at date of disposal? What is the carrying amount at date of disposal? It will be 40,000, right? It will, what is the carrying amount? It is 40,000. But for how much are we selling this asset? For how much are we selling this asset? Read the question. We are selling it for 43,000. We are selling this asset for sale price. How much is the sale price? It is 43,000. Got it. So what does this mean? Our carrying amount was 40,000, but we sold it for 43,000. So what does that mean? What does this mean? Gain on disposal, right? Gain on disposal. Is this clear? Gain on disposal. How much? How much is the gain? How much is the gain? It's 3,000, right? It's 3,000. Is this clear? The gain on disposal is 3,000. I hope this is clear. Now tell me what all things will be shown in the statement of finance. Okay, before that, are you guys good with journal entries? Do you guys know how journal entries work? Come on, everyone. Okay, so tell me what will be the journal entry for this transaction? I need the journal entry. I want every one of you to respond. What will be the journal entry for this transaction? For the disposal of the asset, what will be the journal entry? Come on. Tell me. What will be the journal entry? Yeah, you're right. It's debit cash, right? See what is happening as part of this disposal. We are receiving cash, no? We are receiving what? We are receiving cash, right? Is it clear? See what is happening here. Why? See, for what are we giving this asset? We are giving this for 43,000, right? What is this 43,000? It is cash, right? Are you guys getting this? We are receiving cash. So we are receiving an asset. Our asset is increasing. So debit what? Debit cash. How much is the cash? How much is the cash that we have received? How much is the cash that we have received? I want every one of you to respond. It is 43,000. Got it. It is 43,000. So now let me ask you something. What is happening here? We are de-recognizing an asset, right? We are de-recognizing what? We are de-recognizing this machine, right? We are de-recognizing this machine. So what is this? What was this machine for us? It was an asset, right? This machine was an asset. So we are de-recognizing it. So machine assets value is decreasing. So debit or credit? Debit or credit? Yeah, exactly. We have to credit what? We have to credit the machine. What is the value of the machine? What is the value of the machine that we will show in this journal entry? What is the value of the machine? Exactly, it is 40,000. It is 40,000. What is remaining? Credit. Credit gain or loss? What is it? Is it a gain or loss? It is a gain, right? Gain on disposal. How much is it? How much is it? 3,000. Are you guys clear with this journal entry? Are you guys clear? Is it 100% clear? Is this journal entry 100% clear? Everyone, I need everyone's response. Yeah, it will be going to retained earnings. Okay. See, for the reference purpose, okay, I'll mention it as retained earnings. It will be going to retained earnings. Is it clear, guys? Is this clear? So now tell me what all things will be shown in 2020 FS. What all things will be shown? We have SOPL and we have SOFP. What all things will be shown in the statement of profit and loss and financial position? Tell me, what will be shown? Depreciation. What is the depreciation here? What is the depreciation that will be shown in SOPL? What will be the depreciation that will be shown in SOPL? What will be the depreciation? What I want everyone to respond. What will be the depreciation? Come on. What will be the depreciation? What will be the depreciation? So guys, you have made a mistake. See, this depreciation what we calculated was for how much years? It was for 2 years. In SOPL, do we show 2 years value. No, we'll only be showing the current year's amount, right? We'll be showing the current year's depreciation only in SOPL. So how much will it be? Is it 10K? Is it 10,000? It's 5,000. Got it? Is it clear? It will be 5,000. Depreciation of 5,000 will be charged to SOPL. Anything else? Anything else that will be shown in SOPL? Anything else? Will anything, is there anything else in SOPL? Will there be anything else in SOPL? Yeah, exactly. We'll show this gain on disposal. Gain on disposal. How much is the gain? How much is the gain? It's 3,000, right? Exactly. So, okay. So, what about SOFP? What about SOFP? What will be shown in SOFP? What will we be showing in SOFP? What will we be showing in SOFP? Cash plus 43K. Come on, I need everyone's response. I need everyone's response. What will be the retained earnings 3,000? Okay, fine. Okay. Okay, fine. Exactly. See, we won't be showing this cash. Okay. See, we won't be showing cash in SOFP, first of all. We'll be showing cash under where? Under which statement? Under which statement will we show cash? Where will we show cash? We will show cash in statement of cash flows, right? We won't be showing cash in statement of profit and loss in SOFP. See, here we'll only be showing retained earnings. Retained earnings of 3,000. Got it. See, why are we not showing machine? Why are we not showing machine? Because we have already disposed it, right? We have already disposed it. Got it. Are you guys clear? Okay, fine. So is this also clear? Is this topic also clear? Shall we move on? Okay, fine. So we won't be showing what? We won't be showing the value of the machine in SOFP. Why? Because it has already been disposed. Is it clear? Is this clear? Shall we move on? So what we have done is, we have done what? We have done cost model, right? So let's see what will happen in the case of revaluation model. Let's see what will happen in revaluation model. See, let's take the same scenario. Okay. Let's take the same scenario for this as well. So yeah. So this is under which model? This is under revaluation model. Revaluation model. So let's say the fair value at 2020 year end was $47,000. Fair value at 2021 year end was $46,000. Okay. On 31st December 2021, what happened? We sold We sold the machine for what? How much? We sold the machine for 46,500. So now tell me, what is the first thing that we'll do? What is the first thing that we'll do here? Tell me, everyone, what will be the first thing that we'll do here? What will be the first thing that we will do? How do we calculate this? How will we calculate this? How will we calculate this particular question? What all things will be needed? We need the opening value of the asset, no? We need the opening value that is on 1st Jan 2020. 1st Jan 2020. Initial value. What is the initial value of the asset? Tell me. What is the initial value of the asset? It is 50,000, right? It is 50,000. Everyone, are you listening? Are you guys listening? What is the initial value? It is 50,000. So what is the next step? What is the next step? What is the next step? Yeah, exactly. It is depreciation, right? Depreciation. What is the depreciation? What will be the depreciation in this case? What will be the depreciation? What will be the depreciation? Come on, I want everyone to respond. What will be the depreciation? What will be the depreciation? What will be the depreciation? Depreciation will be 5,000, right? It is 5,000. So what will be the carrying amount? Carrying amount at 30th December 2020. What is it? What is the carrying amount as on 30th December? Sorry, 30th December 2020. What is it? It is 45,000. But what is the fair value? What is the fair value at 2020 year end? What is the fair value? What is the fair value? It's 47,000, right? What is the fair value? It is 47,000, right? So what does that mean? What does this mean? What does this mean? What does this mean? What does this mean? Yeah, there is a revaluation gain, right? There is a revaluation gain. How much is the revaluation gain? How much is the revaluation gain? It is 2,000. Is this clear? It will be 2,000. So now tell me, what will be the treatment for 2020 FS? What will be the treatment for 2020 FS? What will be the treatment? What all things do we have in SOFP? SOPL, sorry, SOPL. What all things do we have in SOPL? We have what? We have depreciation, right? We have depreciation. Just a minute. What do we have in SOPL? I want everyone to respond. What do we have in SOPL? What all things do we have in SOPL? What all things do we have? Yeah, we have depreciation. What is the depreciation? 5,000, right? And what else do we have? We have a gain. Where do we show this gain? Where do we show this gain? Where do we show this gain? OCI, exactly. We will show this under OCI, revaluation gain. How much is it? It is 2,000, right? It is 2,000. What about SOFP? What about SOFP? What about SOFP? What about SOFP? Any idea? What about SOFP? Exactly. In SOFP, we will be showing this machine, right? We'll be showing this machine under assets. On which value? On the fair value. What is the fair value? It is 47,000. Anything else? Anything else in SOFP? Anything else? Yeah, we have to show revaluation surplus under equity, right? In equity, we'll be showing what? This revaluation surplus. Got it. How? See, it's not retained earnings. Okay, we'll show this under as revaluation surplus. I told you, right? This will only be transferred to retained earnings once the asset has been disposed. Got it. Is that clear? Okay, fine. So what will it be? It will be 2000. Is this clear, guys? This will be the treatment for 2020 FS. What about 2021? What about 2021? What is the carrying amount of the asset on 2021? On 1st Jan 2021, what is the carrying amount of the asset? Tell me. What is the carrying amount of the asset of the machine? The machine's carrying amount on 1st Jan 2021 is not 50,000. It's the opening value is 50,000 for which year? It's for 2020. For 2021, it is 47,000. Got it. It is 47,000. So what next? What is the next step? What is the next step? It is depreciation. What is the depreciation for this? What is the depreciation? What is the depreciation? It is how much? How much is the depreciation? I want every one of you to tell me. What is the depreciation? What is the depreciation? Exactly. It is 5222. Why? Because the value has changed. So therefore the depreciation will also change. So how do we calculate depreciation? We calculate depreciation based on its opening value. What is the opening value? 47,000. What is the remaining useful life? It's 9. So what is the depreciation? It is 5222. So what will be the closing amount? What will be the carrying amount at date of reporting? What will be the carrying amount at date of reporting? It will be 41,778. It will be 41,778. But how much is the fair value? How much is the fair value? How much is the fair value at 2021? It is 46,000, right? The fair value at date of reporting is how much? It is 46,000. So what does that mean? What does this mean? What does this mean? The carrying amount, the fair value exceeds the carrying amount. So what does that mean? There is a revaluation gain, right? There is a revaluation gain of how much? How much is the revaluation gain? It's 4,222. Got it? It is 4,222. The revaluation gain is 4,222. So tell me what all things will be shown in SOFP, sorry, in SOPL, in the FS, that is 2021 FS. What all things will be shown? We will show what under SOPL, we will be showing what? Depreciation, right? Under SOPL, we will be showing what? Depreciation. How much is the depreciation? It's 5,222, right? Anything else? We'll be showing OCI. How much is the OCI? How much is the OCI? For 222, that is gain. Revaluation gain. Revaluation gain. How much is it? Just for 222. Okay, so let's assume that the asset has been sold in the next year. Okay, just wait. Let's say the asset has been sold. The asset has been sold on 2021st Jan 2022. Okay, so now tell me what all things will be there in SOFP. Tell me what all things will be there in SOFP. What all things will be there in SOFP? Tell me, guys. PP. How much is a PP? That is machine. How much is it? 46,000. Anything else? Anything else? Anything else? Revaluation surplus 42. Okay. So now let me explain. Okay. See, we have equity, right? We have equity. How much is the equity revaluation surplus? Right. How much? For triple two. But let me make one thing clear. See, in SOPL, what all values will we show? We'll only show the values that is corresponding to the current year. What about SOFP? Do we only show the values corresponding to the current year? No. We'll be carrying forward what? We'll be carrying forward the previous years and previous years what? All the things we will be carrying out, right? In SOFP. Do you guys get it? Did you guys get it? See, we'll be carrying the amounts of the previous year as well in SOFP, right? But for SOPL, it only corresponds to the current year. But whereas in SOFP, it's not the case. Okay. So what is the revaluation surplus here? What will be the revaluation surplus? See, we have a revaluation surplus of 4,222 in the current year. And we have what? A revaluation gain of how much? Revaluation surplus of 2,000 in the previous year. So what will be the revaluation surplus? What will be the revaluation surplus? It will be 6,222. Did you guys get it? Is this concept clear? It will be 6,222. Did you guys get it? Everyone, I need everyone's response. Is it clear? Okay. So that we are done with what? 2021 FS. So what is happening on 1st Jan 2021? Sorry, 1st Jan 2022. What happens on 1st Jan 2022? What is happening on 1st Jan 2022? Tell me. What is happening on 1st? Yeah, we are disposing the asset. We are disposing the asset, right? So tell me, what is the journal entry that will take place? Tell me the journal. Tell me the journal entry. For what are we disposing this? We are disposing it for cash. So debit what? Debit cash. What? How much are we receiving? How much are we receiving? How much are we receiving? We are receiving 46,500, right? We are selling it for how much? We are selling it for 46,500. So as we are receiving this cash, what are we doing? We are de-recognizing this what? We are de-recognizing what? We are de-recognizing. We are de-recognizing the PPE, right? We are de-recognizing the machine. So debit or credit? What will be the entry? Will it be a debit or will it be a credit? What will it be? It will be credit, right? We are disposing the machine. So our asset is decreasing. So what? Credit. Credit what? Machine. How much is the value of the machine? How much is the value of the machine that we will be de-recognizing? How much will be the amount that we will be de-recognizing? How much? How much will be the amount? How much will be the amount of the machine that we will be de-recognizing? It will be 46,000, right? It will be the carrying amount. What is the carrying amount of the machine? 46,000. So we'll be disposing the machine based on its carrying amount. So what does this mean? What does this imply? We are receiving a cash of 46,500 and we are giving the machine for 46,000, right? See, the machine's carrying amount is 46,000, but we received 46,500. So what does that mean? Yeah. So that means there is a gain on disposal. Gain on what? Gain on disposal. We'll show this under where? Gain on disposal. How much is it? How much is it? It is 500. So this is, we'll transfer this to retained earnings. Okay. Retained earnings. Is this journal entry clear, guys? Is this journal entry clear? Is this 100% clear? I want everyone's response. Is this 100% clear? It's clear, right? Everyone. Okay, fine. But let me tell you one more thing. See, we are disposing this asset, right? We are doing what? We are disposing this asset. In cost model, this was not there, but in revaluation model, we have something there in our SOFP. What is it? What is it? We have something related to this machine in SOFP. What is it? See, what is it? What is it? We have only de-recognized what? We have only de-recognized the machine, right? We have only de-recognized the machine. What else is there to de-recognize in respective of this machine? Exactly. We have revaluation surplus. I told you this revaluation surplus will only be recognized when? When will this be recognized? When will this revaluation gain be recognized? When will it be recognized? It will only be recognized at the time of disposal, right? It will only be recognized at the, yeah, it will be recognized when we dispose the asset, right? When we dispose the asset. Have we disposed the asset? Have we disposed the asset? Yes. So, shouldn't we de-recognize this revaluation surplus? Yeah. So, what will be the journal entry? Journal entry for what will be the journal entry? Journal entry for revaluation surplus. What will be the journal entry? See, I told you when, see, we have to we have to what we have to do what here? We have to transfer the revaluation surplus to retained earnings, right? We are recognizing the gain. So what? Debit what? Debit revaluation surplus. We are de-recognizing equity. Equity is decreasing. So what does that mean? Yeah, exactly. Equity is decreasing. So as a result, if equity is decreasing, we will debit. What is debit? Revaluation surplus. How much is the amount? How much is the amount? How much is the amount? How much is the revaluation surplus? Yeah, exactly. It is 6,222. What about the credit part? What will be credit? We are transferring this to where? Where are we transferring this? We are transferring this to, we are transferring this to retained earnings. Exactly. We are transferring this to retained earnings. So what will be the retained earnings? 6,222. So this will, see, I told you. So now the gain has become realized. I hope you understood why I told you not to recognize this under retained earnings initially. Did you guys understand? We'll first show it as what? We'll first show it as what? We will show it as revaluation surplus, and we will only transfer this revaluation surplus to retained earnings when? When do we transfer this? When when does this transfer happen? 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 Yeah. This transfer will only happen if the asset is disposed. Is that clear? Is this concept 100% clear? Is it clear, guys? Okay, fine. Okay. Everyone, I want everyone's response. Is this clear? Do you have any concerns with the class? Are you understanding the concepts? Okay, fine. Okay, so you guys can take a 15 minutes break and be back by 5:50. Okay, be back by 5:50. Okay. So are you guys back? Shall we start? Everyone, shall we start? I hope that everyone is back. So yeah, let's see. I hope IA 16 is clear for all of you. Is it clear? Will you be able to do problems from IA 16 now? It's clear, right? Everyone. Okay, fine, fine, fine. Let's move on to the next standard. That is IS 20. You guys know what is IS 20? Do you guys know what is IS 20? What is IS 20? It is nothing but government grant. It's a very small standard. I'll discuss it. It's a very easy and very small standard. See, you can see the questions has been asked from this standard as well. It's very easy. So let's start with what? Let's start with IAS 20. IAS 20 government grant. We have IAS 20 government grant. So, what is a government grant? A government grant is a cash or incentives provided by the government in order to what? In order to support a business. So, what is government grant? Government grant is a cash or incentive provided by the government to support a business. Is that clear? Are you guys clear with the definition? What is a government grant? Grant is a cash or incentive provided by the government in order to support a business. So there are two types of government grants. What are they? Two types. What are they? Two types of government grants. What are they? We have two types. We have two types of government grants. What are they? What are they? Exactly. They are revenue grant. Revenue grants. Revenue grant and what? And capital grant. Revenue grant and capital grant. So what is revenue grant? What is revenue grant? Revenue grant is a grant in order to provide in order to meet the revenue expenditure. Whereas what is capital grant? Capital grant is provided by the government in order to support capital expenditure. So let's say how this will be recorded in the books. Okay. First we have capital grant. Okay. Capital grant. We have capital grant without condition. Okay. Without condition. Without condition. Without condition. So let's say this is a company. A company purchased a company purchased a machine. A company purchased a machine which cost is equal to 10,000. Okay. Cost is equal to 10,000. Government grant is provided. Government grant is provided. How much is the government grant here? Let's say it's just 2,000. Okay. Useful life. Useful life is 10 years. 10 years. So, guys, tell me, what is the government grant that has been provided here? It is? Okay, okay, fine, fine, fine. Uh, how about now? It's visible, right? Okay, okay. Sorry, guys. Sorry, sorry, sorry. See, I'll explain it once again. See, we have two types of grants. What is it? Revenue grant and capital grant. Okay. So let's see how we'll record capital grant without condition. Okay. We are talking about capital grant without condition. Here, what happened is a company purchased a machine for 10,000 whose useful life is 10 years, and a government grant of 2,000 has been received in respect of this purchase. So tell me, how will we show this in the books? How will we show this government grant? How will we show this government grant? Do you guys have any idea? Come on, take a guess. How will we show this government grant? What type of grant is this? What type of grant is this? We are receiving this grant in order to purchase the machine. So, what type of grant? Exactly. We have to deduct it from the machine. So, how will we show this? See, first of all, what do we need? We need the initial value of the machine, right? We need the initial value. So, what is the initial value here in this scenario? Initial value in the case of capital gain. How do we record for this capital gain is, what is the cost of the machine? I want every one of you to respond. What is the cost of the machine? It's 10,000, right? It's 10,000. What is the grant that we have received? What is the grant that we have received? 2,000. So what will be the initial value? We'll subtract this 2,000 from the initial value. So what will be the initial value of the machine? It will be 8,000. Got it? So we got the initial value. What is the next step? Depreciation. What will be the depreciation in this case? What will be the depreciation? What will be the depreciation? It will be 800, right? It will be 800. It will be how much? 800. So what will be the carrying amount? What will be the carrying amount of the asset at the end of the year? It will be 7,200. Okay. Can you guys tell me what will be the journal entry for this? What will be the journal entry for this grant? Grant without condition. What will be the journal entry for what will be the journal entry? What will be the journal entry? Tell me. What will be the journal entry? See, always look into the effect of this government grant. See, as part of, see, we are receiving this government grant. So what is it? We are receiving this government grant. So what will be on the debit side? We are receiving this government grant. So what will be on the debit side? What will be on the debit side? Exactly. That on the debit side, we have what? We have cash. How much? How much is the cash? It's 2,000, right? It's 2,000. Is it clear? What on the credit side? See, as part of receiving this government grant, where is it impacting? Where does it have an impact on? Where does this government grant have an impact on? Tell me, where does this government grant have an impact on? Come on, take a guess. If you don't know, take a guess. Where does this? Yeah, exactly. It is having an impact on the value of the machine, right? See, where did this government grant has an impact on? It had an impact on the value of the machine, right? Is it clear? See what happened to the machine. What was its cost? Its cost was 10,000. But what happened to the machine now? What is its value now? What is the initial value of the machine now? It's 8K. So is it an increase or decrease? Is it an increase or decrease? The value of the machine. It's a decrease. So asset has been decreased. Asset has been decreased. So what is happening? Assets value has decreased. So what will be on the credit side? What will be on the credit side? Machine. Did you guys get it? Did you guys get it? Is this clear? Is this concept clear? Okay. Okay. It's clear, right? So while preparing the FS, what all will be shown under SOPL? What will be shown under SOPL in this scenario? What will be shown in SOPL in this scenario? Tell me. What will be shown in SOPL? Depreciation, exactly. Depreciation of how much? 800 will be shown. What about SOFP? What about SOFP? What about SOFP? What will be shown under SOFP? Yeah, exactly. Machine will be shown, right? PP. How much will be the amount? How much will be the amount? How much is the amount? How much is the amount exactly? It is 7,200. Do you guys have any doubt in this? Do you guys have any doubt in this? Do you guys have any doubt in this? Is everything clear? Is everything clear? Whatever has been taught is clear, right? Is it clear? Shall we move on to the case of condition with condition? Capital gain with condition. Shall we move on? Okay, fine. We are moving on to what? We are moving on to capital gain with condition. Capital gain with condition. So we are taking the similar scenario. Okay, we are taking the similar case. We are taking the similar case here. So what is happening? A company is purchasing a machine again for 10,000. Its useful life is 10 years and the government grant received is 2,000. Okay. So in the case of capital grant, what we'll do? See, there is a condition, but here the difference is that there is a condition. See, condition is to condition is to use the machine for 10 years. Machine for 10 years. So what will we do here? What will we do here? First of all, what do we need? See, can we recognize this government grant? Can we recognize this government grant fully in this case? No, no. Why can't we recognize? Because there is a condition. What is the condition? The condition is to use the machine for 10 years. Did you guys get it? There is a condition. So when can we recognize an income? See, government grant is some sort of income, right? When can we recognize an income? We can only recognize an income once the obligation is satisfied. Exactly. Till the criteria is met. What is the criteria here? It is to use it for 10 years. Okay. So what do we need? 1st Jan 2020. What is the opening value? What is the initial amount? What is the initial value in this case? On 1st Jan, what is the initial value? What is the initial value of the asset? Initial value of the asset is how much? It is 10,000. Got it. It is 10,000. What do we need to charge here? What do we need to charge? Depreciation. What is the depreciation in this case? What will be the depreciation? 1,000. It will be 1,000. Now, coming on to the government. See, we have received this government grant. Okay. See, we have received this government grant, but can we recognize it in the books directly? Can we recognize it in the books? No. Yeah, exactly. We cannot recognize this government grant directly in the books. So We have received this income, but have we satisfied the criteria? Have we satisfied the criteria? No. No, right? We have not satisfied the criteria, but we have received the income. So what is it? We have received the income, but we have not satisfied the criteria. So what is it? Exactly. It is the liability. It is a liability. What kind of liability? Deferred income liability. Got it? Is it clear? It is a liability. It is a liability. What kind of liability? It is a deferred income liability. Deferred income liability. Got it? Is this clear? Is this clear, guys? It is a deferred income liability. Okay, fine, 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 fine. So coming on, what is the liability? What is the liability here? How much is the liability? What is the opening liability? On 1st Jan 2020, what is the opening liability? What is the opening liability? Tell me. What is the opening liability? It is 2000, right? It is 2000. So, how do we recognize this 2000? How do we recognize this income? See, what is this condition? The condition is to use it for 10 years. So we'll do what? We'll split it into 10 years. We'll split this deferred income into 10 years. So what will happen? So we will recognize an income, a deferred income every 1 year of how much? 200. Got it. Is this clear, guys? So what we have to do is, this is our opening liability, right? So as we move on in the future, what we'll do is, for every year, we'll be recognizing, for every year that has been passed, we'll be recognizing a deferred income of 200. So we'll recognize a deferred income. How much? How much will be recognized? It is 2000 divided by 10. How much is it? How much is it? How much is 2000 divided by 10? It is 200, right? So what is the closing liability? What is the closing liability? What is the closing liability? It is 1800. Do you guys get it? What is the closing liability? It is 1800. So under SOPL, what do we have? So coming on to the FS, what do we have? Coming on to the FS, what do we have in SOPL? In SOPL, we have what? We have depreciation, right? How much is the depreciation? It is 1000. What else do we have? What else do we have? What else do we have in SOPL? What else do we have in SOPL? We have deferred income, right? We have deferred income of how much? We have deferred income of 200. Deferred income of 200. Got it? Is this clear? What about SOFP? What do we have in SOFP? What do we have in SOFP? Tell me. What all things do we have in SOFP? We have liability. How much is the liability? How much is the liability? We have 1800 as liability, right? See, 2000 was the opening liability. We incurred, we recognized an deferred income as 1 year past of 200. What else is remaining? 1800 is the closing liability. Anything else? Anything else? Exactly. We have PPE also, right? There is machine. What is the machine's value? What is the machine's carrying amount? After charging depreciation, the initial cost was 10,000. We charge a depreciation of 1,000. So what will be the carrying amount? Exactly. It will be 9,000. Is this clear? Is this concept clear regarding capital grant with condition? Is it clear, right? Shall we move on to the revenue grant? Shall we move on to the revenue grant? Yeah, we are moving to revenue grant. So what is the difference between revenue grant and capital grant? Revenue grant is granted to in order to meet the expenditures, whereas the capital grant is provided to meet the capital expenditure. So let's say a company. A company have salary expense, have salary expense of 10,000. Salary expense of 10,000. Okay. Salary expense of 10,000. Government grant received. Government grant received. How much is the government grant received here? Let's say it is 2,000. Okay. Let's say it is 2,000. So this is without condition. Okay. This is without condition. Without condition. Now tell me, how will we recognize this government grant in the books? Is there any asset here? No, right? What is salary? What is salary? What is salary for a company? It's an expense, right? So where will we show this expense? Where will we show this expense? We'll show this under SOPL. So under 2020 FS, what do we have? We have SOPL. What do we have in SOPL? We have salary expense, right? We have salary expense. How much do we have? How much do we have the salary expense? How much is the salary expense? How much is the salary expense? It's 10,000. It's 10,000. What is the government grant here? What is the government grant? Government grant is an income. Where do we show an income? We'll show it under SOPL as government grant. How much is it? 2,000. Is this clear? Is this clear, guys? Is this clear? See, we can either show it this way or we can show the salary expense as net of the government grant. What is so? What will be the salary expense in this case? We can deduct it from what? Salary expense. So it will be 8,000 in this case. Got it. We can either show this in both ways, but this one is always better. Okay. So the users of financial statements will get to know that the government is supporting them. Okay. So this is better. This one is better to use. Okay. Got it. Is this clear? Is this clear, guys? Is this clear? Okay, fine. So let's see government grant, revenue grant with condition. Okay, revenue grant with condition. Revenue grant with condition. So let's say the condition here is the condition here is to maintain the employees for at least 2 years. Okay. Maintain the employees for at least 2 years. So I want you guys to tell me, what can this government grant be fully recognized in this scenario? In the previous scenario, we recognized the government grant fully, right? Because there was no condition. But in this case, can we show this revenue? I mean, sorry, show this government grant fully. I want every one of you to respond. Can we show this fully? Can this be shown fully? No, right? We cannot show it fully. Why? Why? Because there is a condition. What is the condition? 2-year condition, right? So preparing the SOPL, or preparing the FS. What do we have in SOPL? What do we have in SOPL? What do we have? What do we have in SOPL? Expense, salary expense. What is the salary expense? Salary expense of 10,000. Salary expense of 10,000 will be shown in SOPL. What about this grant? Can we show it fully? Can we show it fully? Can we show this government grant fully? No, right? We cannot show this government grant fully. Why? Because there is a condition. So what is the government grant? See, it won't be shown as government grant. It will be shown as what? It will be shown as what? Yeah, we will show 1,000 as what? 1,000 as what? How will we show this 1,000 in SOPL? Deferred income, right? We will show this as what? Deferred income. How much is the deferred income? 1,000. Is it done? Is that it? Is there anything else that we have to consider here in FS statement? Is there anything else? Yeah, SOFP. What in SOFP? What will we show in SOFP? Yeah, we'll show liability. We'll show this deferred income liability. We'll show liability. What else is remaining? 1,000 is remaining. We received a total income of how much? 2,000. In that we have recognized 1,000. So what else is remaining? Deferred income liability of how much is remaining? 1,000 is remaining. Is this clear, guys? Is this clear? Everyone, I need everyone's response. Come on, guys. What about the rest? What about the rest? What about the rest? Is it clear for everyone? Do you guys have any doubts? Any minute doubts? Don't hesitate to ask. Do you have any doubts? If grant is not fulfilled in 2 years, what will be the entry? Okay. So let's say, how much have we recognized so far? How much have we recognized as an income so far? 1,000, right? We have recognized an income of 1,000 so far. So let's say on 1st Jan 2021, what happened? The condition was breached. Okay, the condition was breached. Okay. So as part of the condition being breached, what happens to the liability? Is it a liability anymore for us? The condition has been breached, right? So what should we do? We should de-recognize what? We should de-recognize what? Liability. We have to de-recognize liability. What is the liability that we have shown in the books in SOFP? What do we have the liability as? We have a liability of 1,000. So what we have to do? Debit what? Should we debit or credit? Our liability is decreasing. So debit or credit? Debit or credit? I want everyone to respond. Debit or credit? Debit or credit? It's debit. Debit liability. How much is the liability? How much is the liability? 1,000, right? So we have already recognized an income of 1,000. Shouldn't we reverse it? How to reverse an income? 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 My question is how to reverse an income. Okay. So you guys are telling me it's credit. Okay. See, we will always debit expense. We will always show expense under what? Under debit, not credit. See, we will only show income as credit. Okay. You guys get it? See, income is the one which is credited. Expense will be always debited. Okay. You guys get it? Did you guys get it? So what will be here? See, we are reversing this income. In order to reverse an income, what should we do? We should show it as an expense, right? We should show it as an expense. You guys get it? Is it clear? In order to reverse an income, what is the best way? To show it as an expense, right? In order to recognize, in order to de-recognize an income, what should we do? We should show it as an expense. So, debit or credit? Debit or credit? Debit or credit? We are showing it as an expense. So, debit expense. What is the expense? What is the expense here? How much have we recognized as an income? How much have we shown as an income? 1,000. So what? How much should we expense? We should expense 1,000. See, the contract has been, sorry, the condition has been breached. What was the government grant that we received? What is the government grant that we have received? 2,000. So what are we doing here? The condition was breached. So what should we do? What should we do with this 2,000? What should we do with this 2,000? Credit 2,000. How? Credit what? Credit cash, right? We are paying it off. Credit cash, how much? 2,000. Is this clear, guys? Is this clear? Is this concept clear? I want every one of you to respond. Is this concept clear? Everyone, come on. Everyone. Is this clear? See what we did here? We de-recognize the liability because it is not a liability anymore because the condition was breached, right? So what we'll do is we'll de-recognize this liability of 1,000. And since we have shown an income of 1,000 already in the books, what we'll do? We'll reverse it, that income, and we'll show it as an expense. So debit expense 1,000. What else is remaining? What else is remaining? Credit cash. We are paying it off, right? We are paying it back to the government. We are paying the 2,000 back to the government as what? We are paying it as a cash. So credit cash 2,000. Is this entry clear? Shall we move on to the next standard? Shall we move on to the next standard? Okay, fine. So next we have IAS 40. What is IAS 40? What is IAS 40? Investment property. So do you guys recall the example that I have taught you before of purchasing the building for rental purposes? It will fall under which category? It will fall under IAS 40, not IAS 16. Got it? So let's see this. See, what is the definition of investment property? Investment property is a land or a building. What is it? It is a land or a building that is held to earn rentals or for capital appreciation. Is it used for the purpose of the business? Is it used for the purpose of the business? No. If it is used for the purpose of the business, what will we do? Where will we show it? We'll show it under IA 16. Got it? We will show if anything is purchased for the purpose of the business, we will show it under what? We'll show it under IAS 16. Is that clear? So what happens here? Here the entity will be purchasing some sort of assets. For what purposes? Its intention will be to earn rentals or for capital appreciation. Got it? Let's say they purchase a land. Okay, they purchase the land and they have kept it for capital appreciation. Where will we record it? Where will we record this asset? Where will we record this land? Under which standard? IAS 40. Got it? We'll record it under IAS 40. Is this definition clear? Is this definition clear? Okay, fine. So let's see how this will be recorded. Okay, how this will be shown. See, actually, we have two things to consider. Okay, there are two models. What all are the models? Okay, it's actually cost model and fair value model. It's not revaluation model. Got it? We have two models here. In IAS 16, we had two models, that is cost and revaluation. But coming to IAS 40, we have two models, which is cost model and fair value model. This is very important, okay? It is fair value, not revaluation model. So let's learn with that with an example. So let's say a company purchased a building. Okay. A company purchased a building for 150,000. Cost is equal to dollar 150,000. Okay. Life is equal to 10 years. Life is equal to 10 years. Intention is for capital appreciation. Got it. Capital appreciation. So, under which standard will we treat this transaction? Under which standard will we treat this transaction? The building is purchased for the purpose of capital appreciation. So what? So which standard? Which standard is it? It comes under which standard? I want every one of you to tell me. It comes under which standard? It comes under IAS 40. So as per IAS 40, there are two models. Two models in which we can record this transaction. What are they? The first one is cost model. And the second one is what? Fair value model. Fair value model. So under cost model. So what if we are using the cost model? So what will be the opening value? Tell me, what will be the opening value? What will be the opening value? What will be the opening value? That is the initial value of the building. What will be the initial value of the building? It will be 150,000, right? So what is the next step? Under cost model, what is the next step? Depreciation. What is it? How much will be the depreciation? How much will be the depreciation? How much will be the depreciation? It will be 15,000, right? It will be 15,000. So what will be the carrying amount? What will be the carrying amount? It will be 135,000. 135,000. So under FS, while we are preparing FS for 2020, what will be there in SOPL? What will be there in SOPL? Depreciation. How much is the depreciation? It is 15,000. What about SOFP? Under SOFP, we'll be having asset, right? Asset under what? IS 40. Investment. Investment in building. How much will be the carrying amount of the building? What will be the value? What will be the value of the building? What will be the value of the building? It will be 135,000. Got it. Is this treatment clear under cost model? Is this clear? Is this clear, guys? Okay. Coming on to fair value model. Okay. Coming on to fair value model. What is the initial value here? What is the initial value? Initial value is equal to 150,000. So let's say the fair value at date of reporting is equal to, let's say, 160,000. Okay. Equal to 160,000. So tell me, guys, what is the next step under fair value model? Tell me, what is the next step under fair value model? Exactly. Will there be any depreciation? Will there be any depreciation for IAS 40 fair value model? No. There won't be depreciation. No depreciation under what? Under IAS 40 fair value model. So, what do we have here? What should we do here? Yeah, exactly. We have to do what? We have to do what? We have to revalue the asset to fair value, right? Fair value at date of reporting. How much is it? How much is the fair value? 160,000. 160,000, right? It is 160,000. So what is happening here? The value of the asset has increased. So what is this 10,000? This 10,000 is the gain, right? Gain. Gain is equal to how much? 10,000. So coming on to the preparation of FS. FS 2020. What all things will be there in SOPL here? What will be shown in SOPL? What will be shown in SOPL? Tell me, guys, what will be shown in SOPL and what will be shown in SOFP? Fair value gain. Will, will it be shown in P&L or will it be shown in OCI? It will be directly shown in P&L as gain on investment. How much is it? 10,000. What about the SOFP? What about SOFP? We'll have building, right? We'll have building. How much is the value of the building? 160,000. Is this one clear? Is this clear, guys? See, any more doubts in IS 40? Any more doubts in IS 40? Shall we move on to the next standard then? You guys got to know how to record the transaction in SOPL, right? That is the most important thing. You have to know where will we record the resulting gains and the asset and all under FS statements. Okay. If you know that, it will be very easy for you to appear for the exam. The exam will be very easy for you guys. Okay. So moving on to the next standard. This one is a bit important standard, that is IAS 38. Okay, we have IAS 38. What is IAS 38? What is IAS 38? What is IAS 38? Intangible asset, right? So what is an intangible asset? Why is an asset called intangible? Why? Why is it called intangible? Why is it called intangible asset? Intangible. What does that mean? Yeah. There is no physical existence, right? We cannot see it, right? There is no physical existence. Why do we call it an asset? Because we are incurring some economic benefit from it, right? We are incurring some economic benefit from it, right? So that's the reason why it is called an intangible asset. What is its example? We have goodwill, we have patent, we have trademark, we have brand, we have license. All comes under what? All comes under which standard? IAS 38 intangible asset. Is this clear? Is this clear, guys? Is the definition clear? Okay. So let's see how it will be treated. Okay. Again, we have what? We have two models. We have two models of what? Two treatment models. What all are they? What all are they? What all are they? Cost and revaluation model. So let's see this with an example. So let's say a company purchased a patent. Okay. What did a company do? They purchased a patent which cost them 10,000. Cost is equal to $10,000. Okay. Its useful life. Its useful life is equal to 10 years. Its useful life is equal to 10 years. Okay. So this happened on 1st Jan 2020. Is it clear, guys? So how do we record this? We have, as we told, we have two models. We have two models. The first one is cost, and the second one is what? Revaluation model. Revaluation model. Okay. So, what is the first step that we'll do in cost model? What should we do? What should we do? How did we do it so far in cost model? How? Tell me. What is the first step? What is the first step? Initial value. Initial value. What is the initial value? What is the initial value of the patent? What is the initial value of the patent? Exactly, it is 10,000. So, do we have to charge anything on this? Do we have to charge? Do we have to charge anything on this? Exactly. We have to charge amortization on what? Amortization. See, the only the term is different. Okay, rest all are same. The only difference is the term. What is it? Amortization. Amortization. How much is the amortization here? How much is the amortization? How much? It is 1,000, right? It is 1,000. So, what is the carrying amount? What is the carrying amount? What is the carrying amount at date of reporting? How much is the carrying amount? It is 9,000, right? Got it. It is 9,000. So, under revaluation model, it will be the same only, right? It will be the same for revaluation model as well. But what is the difference in revaluation model? What is the difference in revaluation model? What will be the difference? What will be the difference? Tell me. What is the difference in cost model and revaluation model? What do we do? So the calculation so far is equal, same, right? What is the difference? Now what we will do? We have found out the carrying amount. And then what we have to do? What we have to do here? What should we do here? Any idea, guys? Take a guess. It's revaluation model. We have to convert it into what? We have to convert it into its fair value. Got it? So let's say the fair value of the let's say the fair value of patent is 9,300. 9,300. So what does this imply? There has been a revaluation gain, right? Or revaluation surplus. What is it? How much is it? How much is this? How much is this? It is 300. Got it. It is 300. So coming back to 2020 FS under cost model, what all things do we have? What all things do we have? Under SOPL, we have what? Under SOPL, we have what? We have depreciation of how much? 1,000, right? We have depreciation of, sorry, it's not depreciation, amortization. Sorry. We have amortization. Amortization of how much? 1,000, right? What about SOFP? What about SOFP? What do we have in SOFP? What do we have in SOFP? We have intangible asset, that is patent. What is its value? 9,000, right? 9,000. This is how we treat what? Intangible asset in FS statements. Got it. What about revaluation model? What do we have under revaluation model for 2020 FS? What do we have? What do we have? Under SOPL, we'll be having what? Amortization. Amortization of 1,000. What else do we have? Do we have anything else in? Yeah, exactly. We have under OCI, we have revaluation Revaluation surplus. How much? How much is the revaluation surplus? It's 300. What about SOFP? What about SOFP? We have patent, right? We have patent. What is the value of the patent as per evaluation model? What is its amount? It's 9,300, the fair value, right? Anything else in SOFP? Anything else in SOFP? Is there anything else? Is there anything else in SOFP? Yeah, exactly. We have equity, right? Equity. What do we have under equity? Revaluation surplus. Revaluation surplus. How much is it? 300. Is this clear, guys? Is this picture perfect? Do you have any doubt? Is it clear? I want every one of you to respond so that I can move on. Is this clear? Is it clear? Okay. So now let's see. Okay, there's nothing much to explain in this. Okay. So I want you guys to listen, okay? As I won't be writing, I want you guys to listen. What happens for an intangible asset with indefinite useful life? If there is an intangible asset with indefinite useful life, what will we do? So very important question. What will we do? Exactly. We'll conduct what? Impairment test at the year end, right? We'll conduct what? If there is an intangible asset with indefinite useful life, what will we do? What will we do at the year end? What will we do at the year end? We'll conduct what? We'll conduct impairment test. Got it. We'll conduct impairment test at the year end. So, what will we do? See, there will be no amortization, okay, because we do not know the useful life. So we'll conduct the impairment test. If there is an impairment, what will we do? Where will we show this? Where will we show this? If there is an impairment, where will we show this? Where will we show this impairment? Where will we show? We'll show this under SOPL as what? We'll show this under SOPL as impairment expense. Got it? So that is under cost model. What about revaluation model? So under revaluation model, also there won't be amortization, but rather what we'll do at the year end, we will revalue the asset, right? We'll revalue the asset. So any decrease in value will be shown as what? Will be shown as impairment expense under SOPL. Is it clear, guys? Is this impairment, is the intangible asset under indefinite useful life clear? What will we do? We'll show the impairment expense. We'll show the resulting impairment expense under SOPL. Is it clear? I want every one of you to respond. Okay, fine. So let's move on to the next important topic under intangible asset, that is research and development. What is it? It is research and development. Do you guys know what is research and development? There are some criteria in order to recognize development as in order to capitalize development cost. Do you guys remember what is the criteria? We learned a short form for it. Exactly. It is Pyrite criteria. Got it. Research and development. So I'll give you an example. Okay. So let's say so we are here. Let's say we are here 1st Jan 2020. So this is 30th June 2020. So this is 30th August 2020. Okay. Okay. So let's say there was a research conducted between 1st Jan 2020 and 30th June 2020, and we incurred a cost of $200,000 for what? For research. Okay. So there was a development phase here. We There was a development phase here which cost us around $300,000. Okay, the development happened between 30th June 2020 to 30th August 2020. And our development was successful, and the product was on 1st October 2020. On 1st October 2020, our product began to sell. Okay, we started selling our product. Product began to sell. Okay, is it clear? What happened? See, we conducted a research from 1st Jan 2020 to 30th June 2020, and we incurred an expense of 200,000 for this research. And after research, we moved on to development phase. And our development phase was from 30th June 2020 to 30th August 2020, and we incurred an expense of 300,000 for this development phase. Okay, so nothing happened in September. Okay, nothing happened in September, and our product began to sell in which date? From 1st October 2020. So, as per IAS 38, can we capitalize this research and development cost? Tell me, can we recognize? Can we capitalize? See, in IAS 16, we capitalized all the costs that has been incurred in bringing the asset to its full working condition, right? Similarly, can we capitalize research and development in this case? I want every one of you to respond. Can we recognize both research and development? No. We can only recognize what? Capitalize what? We can only capitalize what? Which expense? We can only capitalize development expense. But can we capitalize every development expense? Can we capitalize every development expense? No. Why? 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 Because in order to capitalize development cost, there are certain criteria. So what criteria? Pirate criteria. Got it. We have. Should I explain the pirate criteria, or do you guys know it? Should I explain it? You guys know it, right? What is the pirate criteria? So okay. So I'm not getting into pirate criteria. So if the pirate criteria is met, let's assume that the pirate criteria is met. Okay. Let's assume that the pirate criteria is met and for this development cost. So what will we do? What will we do with this development cost? What will we do with this development cost? Tell me. We will capitalize it as what? We'll capitalize it as intangible asset. Okay. So now tell me, what will be the opening balance? What will be the opening balance of this development cost on 1st September? Development cost on 1st September. What will be the development cost? What will be the initial value? Opening balance of development cost. How much will be the development opening? It will be 300,000, right? It will be 300,000. Is this just an expense now? Is this just an expense? Is this development cost an expense now? No. What is it? What is this development cost now? What is this development cost now? It is an asset, right? What kind of asset? What asset? What kind of asset is it? It's an intangible asset, right? It is an intangible asset. So, what happens to the intangible asset? What should we do with an intangible asset? If you are showing it in the books, what should we charge? What should we charge? Amortization. But here, there's one thing. See, we will only amortize this development cost from when onwards. We'll only capitalize this amortization from 1st October 2020. Why? Why is it that like that? Because it is the date at which this product has been what? Yeah. It only see the product was only sold from 1st October onwards. So when will we consider amortization? We will only consider amortization at the starting of the sale. Got it? At the starting of the sale. When did the sale begin? When did the sale begin? When did this product sell? Yeah. When? It's on 1st October, right? It's on 1st October. So we should only charge amortization from when onwards? From 1st October onwards. Until when? What is the year end? What is the year end in this case? December 2020, right? So how many months? How many months? 3 months. So let's say the useful life of this project is, let's say, 5 years. Okay. So now calculate and tell me what is the amortization that we'll be charging here. What will be the amortization? What will be the amortization? How much will be the amortization? How much will be the amortization? I want every one of you to tell me what will be the amortization. How will we calculate the amortization? It will be 15,000. Did everyone get it? It is 15,000. How will we get it? What is the amortization's formula? 300,000 minus divided by useful life. What is the useful life? Useful life is 5 years. Are we incurring this amortization for the whole year? No. We are only incurring it for 3 months. So 3 by 12. Got it. So what is the amortization? It's 15,000. So what will be the carrying amount? What will be the carrying amount of the amortization? It will be how much? How much will be the carrying amount? It will be 285,000. Got it. So coming on to the preparation of FS, 2020 FS. What all things do we have? Under SOPL, what do we have? What do we have under SOPL? What do we have under SOPL? I want every one of you to respond. What all things do we have in SOPL? What all things do we have in SOPL? Amortization. How much is the amortization? How much is the amortization? How much is the amortization? 15,000. What else is there? Is there anything else? See, we incurred a research cost, right? So what is the research cost? It's an expense. So research expense. How much is it? How much is the research expense? 200,000, right? So 200,000 in the SOPL. What about anything else? Is there anything else? Is there anything else? No. So let's move on to SOFP. What is there in SOFP? What is there in SOFP? Come on, guys. What is there in SOFP? What is there in SOFP? What will be there in SOFP? What will be there in SOFP? Come on, tell me. Intangible asset. What will be the value of intangible asset? What is the value? What is the value of this intangible asset? Will be 285. This is how you record what? A research and development scenario. Is that clear? Is that clear? Everyone. I want everyone's response. Is it clear? Everyone who's so almost 14 to 15 students are attending. I want everyone's response. Is this clear? See, whatever was taught today is clear, right? See, we covered almost 4 standards. Is everything clear? Do you have any doubts? Is everything clear? So shall we wind up today's session then? We'll start with impairment of asset tomorrow. And can you guys tell me which all standards do you find difficult so that I can take it? So I can give priority to it. As we only have 6 days. Okay, EPS. You're talking about financial interpretation, right? Okay, revenue. Revenue. Okay. Oh, is it revenue that tough? Revenue is actually easy. Okay, we'll take revenue tomorrow then. Okay. Along with impairment and all, we'll take revenue. I can assure you that after listening my class, you won't feel difficult in IFRS 15. Okay. Anything else? Any other standards? Usually students find no. My name is Lahan. Okay, any other standards? Any other standards do you find difficulty in? Oh, okay, fine. No. Anything else? See, do you have any concerns about your preparation? You can ask me. Do you find difficulty in preparation and all? Anything? I can assist you. IAS 12. Okay, income tax. Okay, fine. See, you can ask me if you have any concerns regarding your studies or whatever. I can assist you. Any more concerns? Shall we wind up then? If there are no more concerns, can we wind up? Okay, fine. So we will wind it up then for today, and let's see if I can start revenue tomorrow. So I want you guys to get some benefit from this revision batch. So if you are finding difficulty in IFRS 15, IAS 12 and all, I'll be taking it. Okay, I'll give priority to those standards. Okay, if you are good with, if you are 100% sure with the standards that I'm taking right now, you can tell me so that I can skip those standards as we have only 5 more days, right? So I can give priority to whatever things you are facing difficulty in. Okay, we'll take class accordingly. Is it okay? That will be better, right? Okay, fine. So yeah, thank you guys. Thank you for joining. We'll wind it up.
Is it not done?